Hello, everyone, and welcome back to another live by your Forex Learning Hub, PrimeXar. This is Janal Safti, joined by the ever insightful Sumitra.
Hello viewers and hello Jana. Thank you very much for having me here. Looking forward to have a great discussion today.
Thank you, Sumitra, and thank you, everyone, for joining. And let me tell you, last live we discussed uh, about Jess Livermore, and it was a great trading story and it had an amazing moral. I hope that you have watched this, and if you did not, this is not to be missed. You have to learn the moral about revenge trading and why we never do this. So if you did not watch this, check it out on our social media platform. But now, for today, we are discussing about the CPIs, this tiny number that has a massive consequences on the market. So Sumi, can you break it down for us?
Definitely Jana. Thank you very much for asking. So viewers and Jana again, let us keep this very simple. CPI or the Consumer Price Index is a measurement of how much the prices have moved of goods and services on a monthly basis. This is also released every month by the major economies like US, UK, and the Eurozone. Why is this important? Because this tracks the cost of everyday goods and services like your electricity, gas, rent, or groceries. And if you calculate it and you compare it with the last month, if the costs go up from the previous month, that means the CPI have risen. If the CPI goes up, the inflation goes up. But in case the previous month comparison, the cost did not go up or it was flat or maybe it fell, the CPI have also fallen. That leads to weak inflation or we say deflation. So why is this important for you and me or the traders in specific? Because the central bank uses this as a tool to control the interest rates. When the interest rates move, the currencies also move. That's why at PrimeXar, we teach the traders to use this as a compass. So now you learn where the inflation is pointing at before you actually trade. So now let me ask you a question. How many of you check the CPI before trading? Be honest, guys.
Oh, I think if you are not checking the CPIs, you will be caught. That was a trick question by Sumi. Okay, we are waiting for your comments on our social media platforms. We want to see if you are checking or not. And if you are not checking, I can tell that after this live, you will be changing your mind. If you are already checking, then good for you guys. A big shout out from both of us. Thank you, Sumi. That was very insightful. And before we dive deep into the CPI, let's zoom out a little bit and focus on that particular word you mentioned, inflation. Some new traders still confuse this concept. So let's explain it and break it down a little bit for you. In similar, simple words of our daily life, Sumi, have you ever had this situation when a friend comes to your home uninvited and they end up eating everything in your fridge?
Yeah, I did.
Well, I'm sure we all have been there once. This is a simple example, but technically, inflation is the increase of the daily goods across a certain amount of time. When it increases, that means your money buys less. But when it decreases, that means your purchasing power increase. You can buy more. While it sounds good on paper, be careful, guys. It's not that good. Deflation can spook the economy too. Right, Sumi?
Yes, definitely, Jana. So, let me explain. Jana have actually nailed it. That is the pulse of an economy, the inflation. Why is this important? Because the central bank decides the rates based on this. So, for example, if the inflation is high, the Fed, like the central bank, like Fed, it will increase the interest rates so that your purchasing power is not high or it is low. But if the inflation is low, the central bank will decide to cut on the rates so that it can stimulate the purchasing power. So now you have more purchasing power. Don't you think, Jana? Also, as I would want to explain that the CPI plays a big role here. Why? Because inflation leads to the CPI, and the CPI data decides if the interest rates can be increased or decreased. As we have said earlier, the interest rate move, the currencies also move. Since we are all trading in the forex, currencies play a vital role here. So, back to you, Jana.
Okay, so let's go back to 2022. I remember vividly there was one CPI report that blew up all the charts. I mean, traders were caught up in two sides. They were either popping up champagne if they were on the right side, or they were pulling their hair out. So, Sumi, can you explain it to us?
Definitely, Jana. I vividly remember this, and let me explain this to you. In June 2022, the CPI was 9.1%. That was high in 40 years. Can you believe? So the result was the USD skyrocketed. But the gold, EUR USD, and USD JPY, they did not perform that well. Why? Because the Fed have decided to increase the interest rates that led to the currency like dollar to skyrocket. On the other hand, the gold fell. So where if you are on the buy side with the USD, maybe like Jana said, you're in the party. But if you're on the other side, maybe your stop losses have hit. While I mention the stop losses, let me ask you this, viewers. Did you ever face this stop loss hit during the CPI event trading, or maybe blow your accounts?
Oh, that's a tough question. If you did hit your stop losses, guys, I'm so sorry that you had to go through this. We are waiting for your comments. Please let us know what happened during this time if you were trading at this time. And now, let's bring it back to the current time. So let's say last month, the US CPI report came a little bit higher than expected. I believe it came to 3.5%. Sumi, can you explain the effect of that?
Definitely, Jana. I'm glad you brought this up. So, last month, the CPI was 3.5%, the US CPI. But in March, it was 2.6%. Imagine it increased from 2.6 to 3.5. That was huge. Like we discussed in what happened in 2022, again, the USD, it skyrocketed, or the dollar, it went up, but the gold, it soared. Why exactly? Because the increased CPI has increased the inflation, and the Fed have tried to control the interest rates that made our purchasing power less. I have already mentioned about the CPI. Let me ask you. So, did you ever face this issue of not following the event of the CPI? Let us know.
And while we're at that, I want to ask you, Sumi, did you ever get caught up in a trade that you did not pay attention to the CPI? Tell us what happened. Did the trade go in your favor or did it go against you?
Of course, Jana. So, I can mention that this is a bittersweet moment. So, I generally know that CPI is important. It is released every month. But I was not skeptical enough because once I noticed that there was a huge swing in my trades, I kept hitting the stop losses and I couldn't understand why. Only when I realized that I was trading during the CPI event without tracking what was the forecast and what was the previous numbers. So after this event, so I can say that it was a before and after my realization. After the realization is what I felt that now my trades are really safe.
That was an amazing story. I'm sorry that you got caught up in this, but I'm sure you've learned. And this is part of trading. All the traders make mistakes. So it's not about that you made a mistake. It's okay. It's about learning and not repeating this mistake again. So let us know if you ever had a similar situation while trading. I can see a lot of comments coming. I can see some people, they never checked the CPIs before, and I think now is the time to start. I can see a lot of people also saying that they hit their stop losses. What do you have to say about this?
Jana, to be honest, see, at PrimeXar, we teach that you have to be prepared because, as we said, you should use the CPI as a compass because that literally impacts a mostly traded currency like USD. So, when that impacts it so much, so you have to be very careful. That's why I believe. Also, I should add that during the event times, there will be a lot of volatility. So, you have to be careful and avoid trading at least during the event release time. Now, I have another thing to add here, Jana. We talked about the history and what happened in the last month. Now, I want to add in about the future. So, let us set the future here. For suppose next CPI, the analysts are expecting it to be 3.2%. If the forecast have come correct and the CPI comes out to be more than expected, then it will increase the inflation. So you can see a chase in the US dollar. And if the CPI did not reach to 3.2 or maybe appear to around or below 3.2, you can expect that there will be a less inflation or a weak inflation and the dollar might see a weaker results. So at PrimeXar, we teach the learners to actually know both the stories. I mean, listen, hear to the previous numbers that have come, and also have an eye on the forecasts as well. This way, you're prepared. You're not reacting to the market itself, but you're already prepared and you know what is going to come. So, trade safe, guys.
I totally agree, and I totally encourage you guys to prepare for the future. Don't wait for the event to come. You have to be prepared for it. And while we're at this, I want to ask you, where do you check your CPI reports? I am sure that there are a lot of resources. I want to hear your go-to resources if you are checking already. And I'm sure that Sumi here has prepared for you a surprise, so stay till the end of the live because we will share with you our most trusted resources to check the CPI reports. Okay, Sumi, I can see a lot of comments. I can see a lot of active audience watching us right now. And I think it's time to give them some checklist or some tips and tricks to manage their trades around the CPI time.
Definitely, Jana. And I have to agree that the viewers are being very great today. And thank you for giving us responses. So, since we are in the CPI topic itself, let us have a quick checklist. Maybe you can note down. Let me start. First important thing is that you have to compare the forecast with the previous numbers so that you are now prepared. So when you see a series of forecast versus the previous, you will see how the CPI at different economies are performing. Right, Jana?
Yes.
Second is you have to track the dollar index and gold. Since I have been repeating that the dollar and gold have a critical impact when the CPI data is released, and these will be highly volatile at this time. Also, avoid trading during the CPI release. So, for suppose at 4 p.m. US time, it is releasing. So, do not try to enter into any trades just 1 or 2 hours before the trade itself. This way, you are not encouraging yourself to have more losses. Up next is do not chase the candles. The candles speak a different story, to be honest. When it is event, you please do not just rely on the candles itself. Prepare yourself with the news, as we said, the forecast and the previous numbers. Above all, trade with context. That's the PrimeXar's way. Don't you think, Jana?
I totally agree with you, Sumi. These were 5 golden rules that we have to take care of. And Sumi, can you mention for us the resources or tools we can check from?
Yes, I have kept that surprise for you. So, these are the most trusted websites that we check the CPI data at. This websites will show us the previous and what actually the report had resulted in and also the forecast, along with the currencies and the economies that it is publishing. First one is the forexfactory.com. Second is the tradingview.com. The other one is investing.com. Please note down, let me repeat again for all the viewers. It is forexfactory.com, tradingview.com, and the investing.com. So you can find in the currencies or the exchanges section, you will view all the CPI data there.
I can see also some comments coming. I can see investing, internet, IMF, or I'm so glad that you guys are checking. These are amazing tools to check. Keep it going. Never miss a CPI report. And thank you so much, Sumi, for this checklist. This was amazing. And let's wrap it up before we end today's live. So we talked about the consumer price index, and it tells us about the change of the daily goods over a certain amount of time, and it tells us where the inflation is going. It's one of the most important data traders track. So keep in mind, if the CPI report goes up, that means the inflation is higher and the banks might increase the interest rates. However, if the CPI stays flat or goes down, that means deflation, and the banks might have to cut down rates. So be careful, because when the interest rates move, the currencies move.
Yes, Jana, that was a very crisp and brief of what we have just learned in this session. Thank you very much again. So, let me ask you a question, Jana.
Sure.
So, there is a CPI data and it came out to be positive. Would you buy or sell a currency?
That's a good question. I would actually consider buying the currency. However, I have to say that I need to check first which currencies I am buying the currency pair, because I need to keep in mind that there are correlated currencies, so I can never ignore this. Otherwise, there will be a conflict in my trades.
Oh my god, that was a wonderful answer, and I'm glad you mentioned the correlated currencies. Guys, we have been discussing about the CPI and its impact on few currencies, especially the USD, and its impact on gold as well. But whenever you buy or whenever you try to place a trade, you consider the related currencies as well. And remember that we come live every week with the topics that are real life examples and that relates to you directly, and that they are literally tailor made.
Yes. So let us know if you are interested to learn more about the correlated currencies. Tell us so that we can break it down for you in one of our upcoming lives by PrimeXar.
Definitely, Jana. So let us go through a few of the comments that we see.
We've seen some blown accounts. Oh, I hope that after today's golden rules, this will never happen to you again. And remember, just we said that we learn from these mistakes and we never repeat them. So prepare ahead for the CPI time.
Yes, I hear from Ravi Narayanan. They say that they watch TradingView. Is that good? They're asking this. Yes, definitely. It is also one of our most trusted websites where we not only check the news but also view the graphs. And we have our customized graph where we add the trend lines or the support resistance lines. So, yes, we are with you. Let us check a few more. Yes, I believe. Yes, thank you very much. So, this is Sumi.
And this is Jenna signing off from PrimeXar. Remember, stay sharp and trade smart. And remember that the news don't just move the market, they create opportunities.
Yes, thank you again.
Thank you, everyone, and have a great night.